All right, good morning. Welcome back here to Trader Minute. Great to have you on board. This morning I jumped on for about 5 minutes and talked about the news out of China that we saw that created the downdraft in futures. Futures have been up about 15, and after the China news, we saw them down 15, so about a 30-point swing. And since then we've had Chairman Powell's comments, and a lot of that's still ongoing, and will definitely be newsworthy for the rest of the day. Probably throughout the weekend, and rightfully so here with that. But I'm not going to break down everything that he's saying and what he's doing and stuff. I think it's pretty. I think it's pretty well covered out there. No matter where you go, it's all over the place here. So it's just one where we are seeing Powell start to talk about other countries and things like that, and so we'll see how the market reacts. I've gone in. I filled in the prices for Visa and Micron here just before I clicked on air. 405, 235. So we're sitting with just very small gains on both. And really just not gaining any traction with the options. Both of them, the stock price is appreciated, to some degree. Obviously, to a much lesser degree after a little bit this morning. But we're just the lack of a move, a full ATR move, is keeping those options pretty subdued right here. We do come into our auto exit dates here this afternoon, and it is something where we'll have to look at more closely as we get in here, to this afternoon. There are no new triggers on the board here this morning. We are seeing a 3-7 crossover to the upside on GLD. Now this is one that where I stand with gold. I'm very bullish on gold. I'd love to trade gold higher, but right as it sits, the consolidation risk is pretty massive on it. Could it change by the close? It could. It certainly could, but just looking at it, I would not expect that it would. We are seeing, some downside 3-7 crossovers start to emerge out there. None of them are triggers here so far, but we could see them by this afternoon. Amazon. With the downside 3-7 crossover. This is one that had the upside, didn't trigger bullish, now has a downside. There's a decent chance that we get a bearish trigger here. We have FedEx, which also has the downside 3-7 crossover on it. We have Intel with a downside 3-7. You kind of get the point here. They all kind of look the same, right? These are all stocks that have been laggards. They're all stocks whose Stochh 39.1 are well below 50, and we're seeing a fresh downside 3-7 cross here on them, and for some of these, for the first time since they came off of some of the highs last month. And then we have UPS, which is a little bit different. This one, has the Stochh up here, near the high side there. But Amazon and FedEx and Intel are the three that have the most chance of triggering here by the end of the day. So we'll see kind of where they ultimately, shape up to be come this afternoon. And, we'll react to them if it is called for here. So we have cash for another position. I suspect this afternoon we'll probably have to free up some cash with Micron and or Visa. I was asked this morning if I'd be willing to hold them past their time stops, just given everything that's going on. And, it's one of those where, am I willing? Yeah. Is it something I'm, making any kind of decision on? No. And most likely I'll just kind of run with the algorithm, barring just something, unusual, a little bit of an unusual circumstance, and then maybe, we'll see kind of how things shape up here into the afternoon. All right. There's a lot of chop in the market, right? No doubt, it's very choppy, right? We've seen over the course of this summertime trading, right? And there's that old adage, sell in May, go away, come back in September, right? And you could probably argue that this month or excuse me, this summer absolutely epitomizes that saying, right? Here's the start of May. Here's where we're at. Market just pretty flat, right? Pretty blah, just whatever, summer, right? Just not a whole lot in it. Just a little up, little down, but really just not a whole lot, right? Well, if you've been following the markets over the course of the summer, that's not true. It's been, tariff this and Fed that, and Iran this, and China that, and Brexit this, and there's in Trump that. I mean, there's just a lot that the markets have had thrown at them over the course of the summer. Not unusual, there's always an issue with the market, right? There's always something going on in the market. There's never a market where you go, oh, hey, you know what? Everybody knows everything, and things are going to go this way because of blah blah blah, because everybody's on the same page. No, we wouldn't have a market if that were the case. But we've had a lot of chop. We've had a lot of gap downs that haven't seen sell-offs. We've seen a lot of gap ups that haven't seen buy-ins. We've seen one kind of significant upward thrust right here, right, where we saw the metrics turn. We saw a lot of signals come in, and boom, off we go with some trend elements. But outside of that, there has been nothing. It has been very dry, very choppy, very, in fact, a lot of the stocks where you're seeing some of the bigger trends, a lot of those are based on earnings gaps or some big news gaps, in the case of something like a Boeing. And it's been an environment here that many of you have commented to me on. And it's been interesting reading and assessing some of those comments, because there's always been this underlying element in the community when it comes to the challenge that a certain market condition should yield a certain type of challenge result, which, yes, that's a perception. Is it reality? No, it certainly is not. And yesterday I was asked, hey, given what I know now, right, with how the market has moved over the course of this challenge, has the challenge outperformed or underperformed my expectations? Which is a pretty loaded question, right? We could talk for days about that. First of all, expectations, what are they based on and everything else. But bottom line, I'm going to try to give my best answer here in terms of, how the challenge is done relative to my expectations and relative to everything that's going on. I'm in a pretty different spot for me right now, personally. The challenge, I've been trading the challenge for years. And it's, okay, what's Jeff going to do? Am I going to make this trade? What do I like here? What do I like there? Right? Been a lot of decision making. It's not what it is anymore. It's not what it is. Right? I'm kind of in the same boat as many of you in the community of, okay, you know what? I know how things operate. I know how they work. I know how they're going to function. And hey, I'm going to get in when the signals happen. I'm going to get out when the stops or targets are hit. And other than that, I'm gonna root for it, because I really don't have much control, right? And so I'm much more in a cheerleader type of role, kind of rooting for it. Come on, Visa, let's go. Come on, Micron, let's go. Stupid Microsoft. And it's been interesting, because I've allowed myself to kind of, have a few more of just those highs and lows when it comes to just watching and rooting. But, that doesn't drive any type of decision making, and all of it's really driven here by the algorithm. So in terms of expectations, right? I have hopes every day that every trade is gonna boom. It's gonna be great, grand, and wonderful. But my expectations have to be tempered back into the data, right? And we have 3 years worth of data, over 600 trades worth of data, to base this off of. And if we go back in the market and we look 3 years back, right? We come in and we say, all right, let's just pull up the S&P, and it's now a little more than 3 years, so let's go 3 years, 6 months. That'll be a little more realistic here. And let's just get rid of all our indicators because, well, we don't care. And let's just pull it up. Okay. Here's the last 3 years. There have been several different market environments that this has been tested through, right? We had this initial period right here at the end of 2016. My hopes for the algorithm were pretty low at that time. They had built because we had back tested, we had looked at kind of how things are functioning, and it was looking really good. And then we started to really kind of get into it, and you can see what the market did. I mean, it just flattened out, went nowhere, just had a chop down with no follow through, a chop up with no follow through. And, it was one of those where I started looking back and saying, do I need to tweak things? Do I need to change things? Is something wrong? Blah, 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 right? And why? Because when I'm looking for something with trend, right, a chop market is not going to yield results, and I totally understand that. I get that. But then we saw a lot of crossovers start to come in November and December into January. We saw really nice performance of the algorithm, come in through 2017, really strong performance, into the end of 2017. And in fact, I used some of these trades in the challenge that we were in right back here in January of 2018. And we got off to a really good start. In fact, we got off to a start where we were up over 10K. And, it was one where, my confidence in it really grew. But I also knew something. That while, yes, we had, over a year's worth of data now, we haven't seen all different types of market conditions. We really haven't seen a pullback. We really haven't seen a lot of consolidation. We've gone through periods of consolidations, but, we really haven't seen all sorts of market environments. So then we get into February 2018, and market, drops hard, snaps back, drops hard, snaps back, right? We get into this chop, and I was very interested to see how things performed then, right? Because this is a new environment. It's something different, right? And overall, it held its own. We didn't see massive gains. In fact, I think, if we go back and look at it all, there was a loss in terms of all of the data, but there was a survival of it. And I said, okay, all right, great. And then, caught a nice little May and June, caught a nice kind of, late summer. And, and then we got this move here last year. And this was a very interesting move because it was a lot of chop. Big up chop, big down chop, big up chop, big down. And, the algorithm did okay. In fact, it logged gains here during this time. Now, it had some of its biggest losses during this time, but also had some pretty hefty winners as well. So, we saw bigger gains, bigger losses, but the performance of the algorithm was not as good as what we saw back here in 2017. Okay, but it was still solid, right? It was still solid, still something that a challenge could be run by and go. And then, the beginning of this year, the algorithm started, just spitting out all sorts of bullish signals. And, I was a little more bearish. I thought, man, there's got to be one more leg associated here. And, we started seeing the economic data erode and everything else. I'm like, got to see another down leg. But the algorithm was not giving bearish signals. It was just giving bullish signals here and, performing substantially or pretty darn well. And it was, kind of here in April, I said, all right, I have enough data to say, look, I understand maybe we haven't seen every market condition, but I know what to expect from the challenge, given various time periods. And the biggest thing for me was to see it survive through the chop, right? And it goes back to the whole thing that you hear me continue to say about the challenge, right? Let me get rid of all the scribbling here, but it's right here on the front page. Survive the chop, thrive in the trend, right? We could talk all day till we're blue in the face about, is the market going to trend? Is it going to chop? Is it going to do this? Is it going to do that? And we can look at reasons why it could do this and could do that. But I think on May 9th, when this challenge started, if you told me what this market would be over the course of this challenge, I would probably tell you that this challenge had a pretty good chance of being one of those that goes to zero, just given the overall conditions. And I would say that there is a hope for it, where if it's able to survive, this kind of initial chop right here at the end of May, maybe we could grab some trends at the beginning of June and get off to a good enough start to then be able to survive some of this other, because you know what, we're probably going to get some downside signals come in that are going to whipsaw hard, based on kind of what the action has been. We saw that back here in October, November. We saw that back here February, March 2018, where we get some downside signals that just whipsaw very hard and are really big losses, right? So I would look and I'd say, you know what, we're probably looking at a challenge that's kind of flat to slightly down given this condition, but with one kind of saving grace that, all right, you know what, we did kind of push into a new low, but not every stock will, so do we get enough signals to trade this move? And that's exactly what has happened. We have survived, the challenge has survived the chop on the down. It rode a small trend here, right? Which was just a short period of time. Survived the chop through July, which was massive. We ended up with gains in July, and then has not, and to my surprise, has not been whipsawed hard on downside triggers, right? The consolidation component really has done its job of limiting those downside triggers and those downside trigger whipsaws here out there. So, that would be my expectation based on the past data, that this would be one of those challenges that's kind of flat to slightly down, with a higher risk of zero, but with a little bit of fortune, maybe somewhere around 4, 5, 6,000, given what we see in the market. Now, that's just based on 3.5, basically 3 years worth of data. Right, and when I know, okay, you know what, when we're trending like this, the chances of 100K are very high, right? When we're chopping like this, the chances of zero are just simply increased. And so, I would look and say, hey, you know what, we're not, it's not the choppiest that we've seen, but it is something that, is significantly more choppy. So when I look at the challenge and I see where it's at, we're sitting with about 10K in gains. I look at it and go, come on, stupid thing, let's go. Let's go. But I also understand that given the environment, the challenge is proving itself out, right? It's surviving the chop, right? And yes, we've had some trend signals come in here of late, and had the market gone and trended, they would be doing very, very well. But the market hasn't gone and trended, and they've survived. We've survived a three trade, well, now 4 trade losing streak, basically, and that is something where I have to admit that if I were running the challenge personally, and we hit this type of environment where it was this much chop, I'm probably at a 0 for the challenge personally. And that is something that is tough for me to admit, and it's not something that I look at and say, well, bad Jeff, you're an idiot. Well, no, I would have stepped in and taken a few more risks and a few more chances, and some that paid off, some that didn't. And on aggregate, we're probably talking about more that didn't pay off than did pay off. And we're probably starting a new challenge, here from scratch. And the whole reason behind the algorithm and building it the way that we have is not to be a trade signal service, not to be a trade a minute type of thing. And all right, where's this stock going to go today? Where's it going to go tomorrow? How's what's going to happen? Predictive type of a thing. It's more to be able to play a challenge, to be able to start with small amounts, good solid risk reward, survive the chop in the market, thrive when the trends come in, and let the market do its thing. Because the market is always going to be changing. It's always going to be doing different things. There's always going to be a new headline. There's always going to be, some reason to fear and some reason to get out and some reason to get overly aggressive, right? All those things are going to come and go. But none of those things are in the challenge. And, the way the algorithm is, it's very consistent. And, hopefully that answers the question. Again, a very loaded question, and I could probably speak to it for another full day. But those are just kind of my initial thoughts here with it. And I look at the challenge here so far. This is the first live algorithm challenge we've done with the community, right? And I go, okay, it's proven itself out. It is proving itself out in every way, shape, and form. The numbers themselves are significantly lower than what the historical trends are. We're not hitting the 2 ATRs nearly as much, right? We're in a down period of hitting those ATRs. But I also know that when we get into a period like this, we're going to be hitting the ATRs left and right? And so it's not all that different from other chop periods. It's very kind of similar to other chop periods. And so, to me, we've seen kind of a losing streak. We've seen it survive it. We've been able to kind of see how, it deals and handles with a lot of different data, a lot of different news, and a lot of different, concerns and worries out there. And, let's face it, in, what many consider to be the worst trading time of the year, this kind of May to September time period. I don't necessarily always agree with that, but it does have a historical tendency to be significantly choppier. So when I look at what the algorithm was built for, consistency for this survive the chop, thrive in the trend element, to me, it's absolutely proving it out. And, are there some small tweaks we're going to make going into the next challenge? Yeah, we are. We're going to make a couple very small tweaks. But nothing that's going to be earth-shattering or change things in a huge way. The algorithm is built that it can be tweaked as things change out there, as we see data change and everything else. We'll continue to do that. But, that's where I stand there. Okay, that's where I stand. Alrighty. Looks like as I've been yapping here, we've seen a little more chop come into the market. A little bit of push up here, but nothing too significant with it. We see bonds up, banks down. That's what we would expect to see there. Energy weaker, right? One of the interesting things about the tariff, the tariff news was, you think about the U.S. energy, how do you want to call it? Just massive emergence, right? I mean, the U.S. is producing more oil than it ever has, right? So, we can come in here, U.S. oil production, by year, and we probably get a few images here. And let's see if we can get something that's a little more recent. Let's see what this one's showing. Yeah, I'm not going to waste too much time trying to find them. Maybe this one here. Good old Wikipedia. All right, here we go. But we can see U.S. oil production. Yeah, this is probably a few years behind, but we're up in record production here in the U.S. And one of the reasons is the U.S. and has changed some rules over the last several years, allowing for some exports of U.S. oil, which has not been the case for many years. And so it's just one of those where China's buying a bunch of the oil, right? And so China's going to put some tariffs, some new tariffs on it. Here's a better chart of oil production here. You kind of see that just massive move in the last 5 years of U.S. Oil production. So it does look like the implementation of Chinese tariffs on the U.S. is much more of a political type of move aimed at some of U.S. President Trump's contingencies, the oil sector and the agriculture sector. It's not, we're not seeing a lot in the other groups. Autos are in there, but, this wasn't a backlash against technology. It wasn't a backlash against consumer goods and that type of stuff. This was targeted to, to basically oil and agriculture, and I think that's very interesting and very telling about the way things are playing out. But it also suggests that we could see another big dose of downside, for the energy group, which has just absolutely been throttled here of late. You take a look at something like an Apache. I mean, this stock was trading up in the hundreds back here in 2012, 2013. I mean, it's threatening to break down below 20 levels not seen since the bear market of 2001 and 2002. And so, I think these tariffs from China are only going to reinforce, the bearishness that we're seeing in energy. And it's still one of those where I think one of the best trades on the board, if you're looking for energy exposure, and I really like it right here. This is a trade we talked about back in May. It's a trade I mentioned in July I'd pull off, but I think it's a great entry point right here. And that's buy Chevron, right, and sell the XLE. Right. And so basically what you're doing is you're playing a combo. You're playing for Chevron to outperform, energy to underperform. And, if energy goes to hell in a handbasket, you're going to make money. If energy booms, you're going to make money because the chances are pretty good that Chevron's going to be the outperformer on the next up leg here that we see in energy, and it's probably going to hold its own on any kind of down leg with energy. So you play that performance differential, and I think it's a great entry point for that trade once again. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.